Well, those who know me well are just waving the red flag of the bull. Of course, I hate the Bitcoin success.
Hello, fellow intelligent investors. My name is René Salman, and in this video I would like to talk about Bitcoin and Charlie Munger's take on the wildly successful cryptocurrency. And obviously the topic of cryptocurrencies is a highly controversial one. And the members of both camps, so the crypto investors on the one hand and the crypto skeptics on the other hand, I feel like they feel easily offended when the counterparty expresses some kind of disagreement with their personal perception. So what I'm trying to do in this video is I will consider what Charlie Munger said about Bitcoin during the recent Berkshire shareholder meeting, and then add my thoughts on cryptocurrencies as an investment. And I will try to express my thoughts in a more factual manner than Charlie Munger did. So without further ado, let's get started.
Have you ever wondered how you can make your hard-earned money work for you? Have you ever dreamed of building generational wealth and leaving a legacy? My name is René Salman, and I'll teach you how you can manage and invest your money with confidence, a long-term vision, and without losing your mind. Join me on my journey of intelligent investing and learn how smart people can compound their money effectively and accumulate wealth.
Alright, so on May 1st, Berkshire Hathaway held its 2021 annual shareholder meeting. And during this event, legendary investors Warren Buffett and Charlie Munger answered questions for around 3.5 hours. And obviously during this Q&A session, the inevitable question about Bitcoin also came up. And Buffett himself, politically correct as he is and trying to avoid conflicts, he dodged that question. He just pointed out that he doesn't want 400,000 people to be mad at him, so those that have an investment in cryptocurrencies, just to make a few people, those who short Bitcoin, happy. But his partner, Charlie Munger, as we all know him, he was less reluctant and wasn't trying to be politically correct. And he clearly expressed his disdain toward Bitcoin and cryptocurrencies. And in fact, I feel like he was quite emotional about this topic too. So let me just show you what the two of them had to say about cryptocurrencies and Bitcoin specifically.
This question comes from Raghu Bashwal, and it's for both Warren and Charlie. Now that the crypto market overall is valued at $2 trillion, do you still consider cryptos as worthless artificial gold?
Well, I knew there'd be a question on Bitcoin or crypto. And I thought to myself, well, I've watched these politicians dodge questions all the time, and I always find it kind of disgusting when they do it. But the truth is, I'm going to dodge that question because we probably got hundreds of thousands of people watching this that own Bitcoin, and we probably got 2 people that are short. So we got a choice of making 400,000 people mad at us and unhappy, or making 2 people happy, and that's just a dumb equation. So I thought about it. We had a governor one time in Nebraska, and a long time ago, but he would get a tough question, what do you think about property taxes, or what should we do about schools, and he'd look right at the person, he'd say, I'm all right on that one. And then he'd just walk off. Well, I'm all right on that one, and maybe we'll see how Charlie is.
Well, those who know me well are just waving the red flag of the bull. Of course, I hate the Bitcoin success. And I don't welcome a currency that's so useful to kidnappers and extortionists and so forth, nor do I like just shuffling out a few extra billions and billions and billions of dollars to somebody who just invented a new financial product out of thin air. So I think I should say modestly that I think the whole damn development is disgusting and contrary to the interests of civilization. And I'll leave the criticism to others.
I'm all right on that one.
Well, that was a typical Charlie Munger response. I think that's fair to say. He used strong language, and to some extent his words might come across as disrespectful, especially to those who own cryptocurrencies. But if you follow Munger, this should not be surprising, because that's just the way he communicates. In February of 2020, he actually already expressed what he thinks of Bitcoin. And he said, "It's really kind of an artificial substitute for gold. And since I never buy any gold, I never buy any Bitcoin. I recommend that other people follow my practice." And that was probably a more diplomatic comment he made back then. Okay, so as I said, let me now add my thoughts on Bitcoin here. In fact, I recently listened to a podcast episode of the show Infinite Loops, and the guest on that particular episode was Jesse Livermore, which essentially is a pseudonym. So essentially the person behind that pseudonym is anonymous to the public. But he still has a massive following on Twitter, and as far as I know, he's also a research partner at Jim O'Shaughnessy's, the host of the podcast, at his asset management firm. And during the podcast, Livermore discussed Bitcoin. I think the way he expressed his view on why Bitcoin is uninvestable is, just fantastic, fabulous. So let me just summarize the key points he brought up during this podcast episode. So I guess when I use the term uninvestable, the first thing we need to do here is to define what investing actually means. Well, to me, investing means looking for assets that can be bought for less than they are actually worth. Assets that are practically available at a discount. Now, how do you figure out what something is worth and whether the price someone is offering you is a discount? Well, from my experience, many people are having a difficult time understanding what the concept of intrinsic value actually means. The theoretically most correct answer to the question, what is intrinsic worth, would be that the true worth of any asset should reflect the value of all future cash flows discounted back to present value at some kind of appropriate discount rate. But I would say that's quite an academic description. And I can relate to why that definition might leave many people confused. So Jesse Livermore came up with an alternative explanation that personally I have never heard before. And I feel like that explanation might help you wrap your head around this concept. It's just brilliant. So what did he say? Well, he said the intrinsic worth of an asset is what it is worth in itself, the value you get from owning that asset for its own sake. And a great way to test this would be to ask yourself the following simple question. What would be the most you would be willing to pay for this asset if you were stuck with it forever? Now let that sink in. What he means by saying stuck with the asset forever is that you could not just sell it to someone else on some kind of public market to turn the asset itself into cash. Think of it maybe as an illiquid asset. I think with the help of this thought experiment, you can expose whether you make an investment based on the intrinsic worth of an asset or based on what is often referred to the greater fool theory. Because just selling the asset itself at a higher price is what the greater fool theory is all about, right? The greater fool theory describes the idea that even, or maybe especially during a market bubble, one can make money by buying overvalued assets or assets that don't even possess an intrinsic value in the first place, because you think you will likely be able to sell that asset at a later point in time for profit, because there will always be a greater fool. You will find someone who's willing to pay even more for the asset than you have. But hoping that there will be a greater fool has nothing to do with proper investing, in my opinion. So again, ask yourself the following question. What would I be willing to pay for this asset if I were stuck with it forever? And I think you could apply this to, a bar of gold, for instance. And based on this understanding of intrinsic value, you would obviously not be willing to pay very much for a bar of gold, because A, it provides very little utility, and B, it doesn't produce anything. And this brings us back to the more academic definition of intrinsic worth that I mentioned before. Because apparently only those assets have an intrinsic worth that actually generate something, that generate cash flow. Because if, again, you try to answer the aforementioned question with regard to a house, then you would probably come up with a higher price or value for that house than for a bar of gold. And why is that? Well, it's because you can rent out a house and thereby the asset itself will generate cash flows. So you can buy a house that will generate $15,000 in annual rental income. Well, then you might be willing to pay $300,000 for it, but you might not be willing to pay $10 million for it. So I hope you get the point here. I think the thought experiment that Jesse Livermore presented during this podcast episode might be a little extreme, but it still brings the point across, and it really forces you to think of the true intrinsic worth of any asset you want to invest in. Now in the podcast, Livermore then goes on and adds that we have the concept of intrinsic value on the one hand, and what he calls transactional value on the other hand. And what he means by that is that most assets that we can buy nowadays can be bought and sold fairly quickly, depending on the liquidity of the market. And he made the claim that the more liquid a market is, the higher the price potential buyers are willing to pay because of that liquidity. I think that is also why investors are usually paying a lower multiple for private companies than for companies that are publicly traded. So in short, the transactional value, liquidity, on average adds some kind of premium to asset prices. So what would you be willing to pay for a Bitcoin if you were stuck with it forever? Take your time and think this through. Now, before I share my view on this, let me just say this. I don't want to have a closed mind on this subject, and I don't know too much about Bitcoin, to be fair. Maybe that's also why I'm fully aware of the fact that what I present here in this video might be wrong. But I would like you to do the same and be open-minded and accept or listen to the arguments I put forward in this video. I think generally, if you have an investment, you always need to be open to counter-arguments and put your ego aside. Charlie Munger, again, we get back to the investing legend. He keeps saying that investors need to invert, always invert. And let me just show you a thread the Twitter user, the Rational Walk, shared after Munger expressed his view on Bitcoin during the Berkshire meeting. And I think the Rational Walk nails it here. He said, those who react most hostile when they are confronted with counter-arguments are often the most insecure or have their ego tied to a decision they made in the past. So if you own Bitcoin and feel offended by my video, lay out your case in the comments down below, but do it in a rational and friendly manner. Thanks. And now let me add one more aspect here. I just want to be very clear that I think one needs to distinguish between the technology, the utility of cryptocurrencies, the blockchain, because I think the blockchain technology offers tremendous benefits. Well, but I think we need to distinguish between the blockchain technology and then, cryptocurrencies as an asset, as an investment. I think the two are two completely different pairs of shoes, and I think the conversations about Bitcoin always get lost when you don't make that distinction. Well, so if we now finally get back to the question that I just asked you, what would be the most you would ever pay for a Bitcoin if you were stuck with it forever? Well, personally, I wouldn't be willing to pay anything. Owning Bitcoin, the asset, has zero utility and the asset doesn't produce anything. So based on the definition that I presented in this video, Bitcoin has no intrinsic value. It's like a currency. And if an asset has no intrinsic value, well, how can you invest in it? Well, let me tell you a secret, you can't. There's absolutely no way you could justify why one Bitcoin would be worth $200 or whether that exact same Bitcoin should be worth $500,000. But let's just hear what Jesse Livermore had to say on Jim O'Shaughnessy's podcast.
I would say that in theory, yes, Bitcoin is a bubble because it has no intrinsic value. There is no price that I would pay to own a Bitcoin if I was stuck with it forever. And I would hope that everyone else would agree. There's no value whatsoever to owning these ones and zeros on a computer somewhere. The value is in the ability to get someone else to buy it from you with any currency or to take it as payment. The difference between Bitcoin and a currency, to your point, is that with a currency, you have a military that can force you to use it, right? And that can stop you from using other things. I'm a little more comfortable holding cash for that reason, because I'm like, well, if I hold cash, I know they're not going to let this thing just go to nothing. So I'll say that. And that's my discomfort. That's why I don't play crypto. I don't do crypto. I can't sleep at night when I do this. I have no idea what I'm doing. No way. It's real money to me, and I was raised this way, and I don't want to play, and I don't want to take losses.
Now, what I found interesting in that podcast was that Bitcoin might have reached a status that is so significant because so many people believe that it has some kind of underlying value, that the Bitcoin bubble will actually never burst. Just like people believe gold as an asset has a higher value than the utility value of gold, the industrial value. I think nowadays the price of gold as an asset is just so broadly accepted that this will probably never change anytime soon. And Bitcoin too might have already reached that critical mass, might already be too big to fail, as governments and policymakers will have a hard time intervening here, enforcing some kind of laws maybe that would make Bitcoin worth less or less valuable, because then hundreds of thousands of people would lose a lot of money. And all those people are potential voters, and therefore the underlying incentive structures of politicians that might lead to inaction on their part. And again, Livermore expressed his thoughts on this phenomenon much more clearly than I can. So let's just listen to how he explained it in the podcast.
So the point is, it's a bubble, but you have to caveat that, I think. There are two types of bubbles. There are what I would call rational bubbles, and there are irrational bubbles. That's an irrational bubble because you have a mechanism to kind of force the things back into a configuration that makes more economic sense. With Bitcoin in this environment, you don't have any of those things. I can't find in the Bitcoin realm anything that would force the price to go back to what I think the intrinsic value is, which is goose egg, okay? And I don't think it's going back there. I'm not even confident it's going to go back to 10,000 or any, I have no idea. I will say this, another thing that could force this situation back down is, as you said, policy. But even that, I think the risk is falling. And the reason why is the more that Bitcoin becomes adopted, it becomes too big to fail. If everybody owns Bitcoins, now you have more voters who are going to take losses if you crash Bitcoin. So the window for policy to get involved, at least without a very strong impetus or a very strong offense that they're trying to respond to, the window for that is shrinking as this becomes more and more of a thing that more and more people's financial futures are tied to. With all that said, I would say then, crypto assets are a rational bubble because there is no mechanism to force them back to their intrinsic value. All of the risk now is in the price. And that's why I'm so uncomfortable. I have no idea how to price it. There is no way to know. All you can do is just look at supplies and try to think of, okay, well, what if it becomes like gold, or what if it becomes like this or that? How much of a market cap would it? That's all you can do. And it's very, very kind of fragile logic.
So what's the bottom line here? Well, Charlie Munger, he has clearly expressed what he thinks of Bitcoin. He hates it. And Buffett, clever as he is, he dodged the question. But eventually he said that he actually agrees with what Charlie Munger said. And I'm pretty sure, like almost 100% sure, that Buffett would subscribe to everything Jesse Livermore says on this podcast episode. So when you're finished watching this video, feel free to hit or search the Infinite Loops podcast to check out this episode in full. They also discuss various possibilities which might lead to a crash of the cryptocurrencies. And their ideas range from a shift in investors' psychology to government interventions, such as maybe making Bitcoin transactions a taxable event, or maybe even another currency might come up and eventually disrupt Bitcoin. And that should be it for this video. So as always, may your finances and investments prosper. Good luck.